In early November, Palantir reported quarterly financial results and held a conference call with Wall Street analysts and explained all of the reasons of their phenomenal success and reported some tangible evidence of the fundamental organic improvement and accelerating demand for its products and services. So these are things that I feel every Palantir stock investor needs to know about. So I'm going to go over them with you in detail here.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So in its most recent update, Palantir's management team, Dave Glazer specifically, said that on a trailing 12-month basis, they generated $2 billion in adjusted free cash flow in the first time in the company's history. Palantir has become a cash flow generating machine, and that positive cash flow generation is really meaningfully improving the company's balance sheet, which is already a pristine balance sheet to begin with. It now has billions of dollars in cash and zero debt. That balance sheet is an opportunity for Palantir to make some strategic decisions that could meaningfully improve the business prospects even further from where it is today. Furthermore, it can use that cash to buy back stock, something it hasn't done very aggressively, and understandably so, because Palantir stock has been trading at a very expensive valuation. So I'm happy that the management team hasn't used the capital to buy back stock at these super expensive levels, and rather just held that in reserve just in case there's a major dip in the stock price, just in case there's a major crash in the stock price. It can swoop in and buy up billions of dollars worth of the stock if or when it goes lower. The company reported third quarter revenue increased by 63%. Its U.S. revenue specifically increased by 77%. Of course, you can understand why Palantir is achieving more success in the U.S. compared with its international segment that's actually in decline. It's because Palantir is so closely associated with the U.S. government that international businesses are hesitant to work with Palantir, and more so ever since, not ever since, but ever since its launch, it's been very closely connected to the U.S. with meaningful amounts of U.S. government contracts, working with the U.S. military, and all of that makes it more risky for companies outside of the United States, especially countries that are not strong allies of the United States, to work with Palantir because they're fearful of the access the U.S. government has to the company and the company's data. They also highlighted that they closed their highest ever total commercial value bookings at $2.8 billion in the most recently completed quarter. That's up 151% year over year. Remember, these bookings are the value of the contracts they signed during the quarter. It cannot recognize that as revenue immediately. It recognizes it as revenue as they perform what's agreed upon in the contract. The $2.8 billion is the value of the contracts they signed. Some of these might be 3-year deals, 5-year deals, 7-year deals, whatever. They can recognize revenue as they perform the obligations agreed upon in the contract. So this is a signal of what Palantir's revenue growth will look like in future quarters and future years. I especially like when a company reports billings that are above the revenue growth rate. In the most recent quarter, Palantir, as I mentioned, reported revenue growth of 63%, but reported billings growth more than twice that figure at 151%. That suggests that the company's revenue growth at these levels can persist for a while longer, as long as they continue to report bookings of this number at this growth rate. Then it's very likely that the company's revenue growth rate remains elevated for the foreseeable future, and that total commercial value bookings number is one of the most impressive numbers that Palantir delivered in the most recent quarter. That figure surpassed the prior highest figure by nearly 500 million. So prior to this, the highest ever quarter they had in TCV bookings was 2.3 billion. This one was 500 million above that previous high. The customer count increased by 45% year over year and 7% from the previous quarter. But still, they have only 911 customers. Only 911 customers. For a company of this size, delivering this amount of revenue, they only have 911 customers. That just goes to highlight how expensive Palantir services are. Palantir is best in class in its category by a wide margin. The gating factor, or the reason why Palantir doesn't have more customers, is because not everyone can afford Palantir services. Enterprises have to have a large enough budget to be able to afford Palantir services, and not every enterprise has that. So Palantir is exclusive to the best of the best. And in this 911 customers, many of them are government institutions, and sometimes Palantir even counts the same segment, like in the U.S. government. They might have the U.S. military, and then the U.S. military has several divisions, and they might count each one of those divisions as a customer, depending on if that division contracts with Palantir individually or if they contract with Palantir uh, comprehensively. And so they really don't have that many customers. And that's something that I've been impressed with Palantir in recent quarters, is their ability to expand outside the US government and start making inroads with US commercial enterprises. They've done a great job at demonstrating the value they provide and convincing enterprises to purchase their services. And in the trailing 12 months, their revenue from their top 20 customers increased by 38% to $83 million per customer. Total remaining deal value in their US commercial business grew 199% year over year and 30% sequentially. That means the total value of remaining performance obligations increased by 199% year over year. So the billings growth is the value of new contracts they signed. The total remaining deal value is the sum in aggregate of all of those contracts they've signed. And that's an indication of future revenue as well, along with total billings growth. So these two figures that highlight what Palantir's revenue could look like in future quarters and future years remains exceptionally strong and improving, and that is great news for Palantir stock investors. By the way, did you know about our exciting channel membership program? You get so much for less than $5 a month, including dozens of exclusive videos, access to exclusive research on over 100 stocks, and early access to many of my videos before everyone else sees them. Click that join button below to learn what this program is all about.